What's going on? How's everybody doing today? This will be my second live. I suppose I should add a little description to this video here. All right, we updated our little description there. This is my second live, so bear with me. I think we've worked out some of the technical difficulties and what have you. Okay. So now that I think the sound works good and we have a good screen and everything, we can go ahead and take a look at some examples of what we were looking at on our first live. So our previous live, we were looking at some examples, if you remember, on the euro versus the dollar. And here we are. This is a chart that we had drawn up yesterday, and we was just talking about some ideas of what possibly the market could be doing, what they were thinking. And if you remember, yeah, no, that wasn't yesterday. That was, I apologize. That was 2 days ago, our stream. And if you remember, about a day and a half ago, when we ended our stream, we were about right here where that white line is. And we had all these ideas thought out on how things were going to go. And as you can see, it did something very interesting here. We saw it was consolidating down here, and we kind of had an idea of, okay, a little bit of consolidation. We saw a little bit of bullishness down here. Very slight, you know, just some slight hints on the market could be reversing to go back up to possibly take some money of all the people that have been betting on price to continue down. Because there's money up here. I know you can't see it, but there's money up there. People that are short on this pair and they haven't closed their positions because they're just certain that price is going to continue lower, as it very well could. But as we were talking about when we left off in this area, we were talking about how price could do a few things. It could come back up here, take some of this money here, maybe consolidate, go back up, take some more money. We had mentioned that it could just do some more sideways price action consolidation here. And we also mentioned that it could take a further dump to go lower. And here we are. This is the result of a day and a half of price action. Wow, that is so boring right there. This is like a trader slash investor's nightmare of what they call sideways price action. It's just doing nothing, you know, and it's just teasing everybody, you know. We're going to go ahead and clean this up and erase the board and see where we're at now. So on this particular pair here, we have been just going sideways for over 2 days now in this area. So what does that mean? What does that mean when any particular asset, stock, or currency pair, whatever you're trading, what does that mean when it's continually going sideways like that? It's just building orders. That's all it's doing. It's just people that are wanting to come into the market, and I think price will go up, and it fills their order. And then people coming in saying, I think the price is too high. I think it's going to go lower, and it'll fill their order. And it's just filling orders, filling orders. All you can take from that is, why are they hanging out here so long? What is going on? What's the objective? And the only thing you can use to determine that is what has happened before. So we're going to draw a cute little box around. This is our current area right here. We'll make that box a little brighter there. And this is our current area right here. So what we're going to do is just try to come up with a high probability case of where price might end up, because it's obvious right now that the price of anything does not lie to you. And it's obvious right now that it's just hanging out in this zone. It hasn't made a decision to go lower. It hasn't made a decision to go higher. And all you can use is what has happened before to determine the highest probability of what could happen ahead of us. Now we're going to zoom out a little bit and look at this in particular. This time frame here is representing 1 hour time frame. What that means is that represents that each candle is 1 hour of time that has passed. So in this consolidation area we're in right here, we have over like 30 candles in here already. It's been 30 hours and price has done nothing. So as to come with the idea of what could happen, you have is what's happening now and what's happened in the past. Don't worry, I'm getting back on track here with my thought process. So in the past, we had price moving up, quick wick up, peak here, and then slowly start dragging down. So it's sold off here, and then a quick jump up here, and then more selling, more selling. A quick jump here, and then right here was wham. That's a very fast move right there. That's not very fluid. All of this other movement is natural for the market. Very natural movement here. And this is my point. This is natural flow of the market. And there's money to be made here, but there's natural flow to the market. But when you see something like this, wham, that nasty candle right there, that candle right there is what is to be considered a candle of imbalance. That candle just really showed it it showed a couple things. Number one, it showed that all this action that was been happening here the past 100 hours, 200 hours, whatever that is, 10 days or so, all that's showing you that this is all consolidation too. And there's people that are selling up here, and there's people that are buying down here. So the people that are selling, their money is up here for the market to take from them. Because if it goes up, it's taking money away from people that are selling. And if it goes down, it's taking away from the money from the people that are buying. So all this past 10 days, it did all this consolidation. And then right here was the move. This quick move down. Why was that the move? Because it was so fast, it didn't give the buyers here time to react to take their money off the table. So majority of the people that were purchasing this pair or going long on this pair, they usually had their uncle ouch moments, stop limit orders, stop losses all through this area. So, and it's obvious that the market came to them because it's as simple as this. Which side has more? That's where it's going to go. So at this point in time, when we reach when we reach this moment, the market made a decision, and its decision was that there is more money down here than there was up here. And it's as simple as that. The market is as simple as that. When you have a consolidation area, the market generally will move to where the most money is because greed is an amazing thing and it's a predictable thing. Over time, it gets more and more predictable when you see how greedy the market is. So, that's the story that told us. The past 10 days on that pair, that's the story it told us. All of this consolidation here, sellers and buyers. We reached about 4 days ago and it made a decision to take the majority of the buyer's money, which it did right here with that quick drop down to this no man's land. And now, where we're at right now, is we are in that consolidation area that's forming now on a smaller zoomed in section, ever so slightly. Now, what that's telling me personally is that's telling me when you have a quick move down and then a consolidation, it's generally making a decision. That's what the market's telling you right now. The market is telling you, okay, we done took all this money from people. So now they're kind of deciding, they're filling orders and they're deciding, well, is there anything more, lower, below us? Is there anything further down here that we can get? Or, if you remember, for the past 10 days, you know there's money up here. You know good and well there's some money up here because a lot of people have been shorting this. People have been shorting this. People have been shorting this. And especially right here, this area. Let's get rid of that. Especially right here, you know there's a lot of money right here. Now, why do I say that? Because in general, traders, they like to place their stops at a previous high. So right here was a quick move up. And a lot of people, they started going short and they say, okay, I'm going to put my stop up here. And price went in their favor. And it got here and it took another leg down. And some more people, they put their money right here. They say, okay, I'm going to put my stop right here and I'm going to hold this short down to make some money. And then price come up here, same thing. It's a repeating pattern. And it never took their money. This section never took the first section's money. This section, it took these guys' money, but it didn't take these guys' money or these guys' money. And people like to hold their positions for a long time. They don't pay themselves because they're of the belief that price can always go further than what it truly does. And this is a story that you build when you're coming into the market and trying to make a little bit of analysis. So there's money here, money here, money here. I can guarantee you there's still stops up here just waiting to be stopped out. There's money sitting up here. And price made a nice move down, slight pullback, bigger move down. Now some late to the game people, they started realizing, oh man, the market's going down. The market's going down. I'm going to start selling. So they start selling here. They start saying it's going down, it's going down. And they put their money right here. Now these gentlemen over here, these gentlemen were pretty early on shorting the market. These people right here, all this consolidation, all this selling and buying going on right here, they're late. And they put their stop probably right here because they're taught to put their stop at the previous high, which was this very small hill right here. So there's money there. But what did the market do? The market ripped up real quick and took that money. Basically, the market said, nope, you are too late to the game. If you were going to short, you should have shorted from over here. Don't even think about shorting right here. You're too late. We done, we've done made the decision. And it started going down, making everybody question, oh, okay, now it's going down. And then they start putting their money right here, just above that candle. And nope, we're going to take that money too. You're still too late. And they took that money. And then by that time, generally, a trader would have probably just given up and said, well, price is probably just going to go higher now. I'm not going to bet the market down. And what did it do at that moment? Ripped it down and took all the buyers' money that had been buying all along this point. So now that the market has that money, on this chart we're looking at right here, where do we know there's some money to lie at? Over here. So all we can go by is what price is doing now. It came down, it made a slight consolidation here, and then took another leg down. So it really twice took some money from people that had been buying the past 10 days. It took it here, and then it took another leg down. And this is a small consolidation here. But notice where we're at now. We're in a little bit of a larger consolidation area. So that that's screaming indecision of the market. The market hasn't made up its mind yet. It hasn't made up its mind on whether there's any more money to be had down here from far in the past, because there might still be some money down there from in the past. See, there's still down here, there's a little money it could be have. Or if it's going to finally decide, okay, now that we've really convinced everybody that's going down, and a lot of people are trying to short it now because they see all this red, and it's a natural habit of people when they see red to sell, that the market is going to say, uh, no selling for you, and whoop, take all that money. Take the money from this consolidation area, take the money from all this consolidation area, and take all this money that's sitting up here of people that are kicking themselves. Because up here, I'm telling you, if price was to rip up here, right here, and take this money and that money, all the people about a week ago that were shorting the euro versus the dollar are going to be kicking themselves because they didn't close their position today or yesterday or the day before while it was sitting down here and they were in the money. That's good money right there. If you had shorted from here or even here and you held it till today, you're in a good spot. At the very least, you should move your stop down to where it's in profit or just close your position entirely and wait to see what this box does. But that's kind of a story of how price behaves in the marketplace. And when we zoom out even more, you can even see a different story. You can see a very different story when you zoom out even more. We were just looking at this area. This is the story that we were discussing. This is where we're at currently. So if you look here, all this blank space underneath, change the color of this for a better representation. Uh-oh. All right, we need to get rid of that. Apologies. And I can remember how to get rid of that. Let's see here. Oh, here we are. Sorry about that. I was looking for the minimize tab. So our first story that the market was telling us, we were discussing this area. And it had come down and taken all this money that was here because people for the past couple weeks have been buying Euro USD, thinking, wow, it's getting pretty high. It's probably going to go up higher. And they had all their money right here because they saw this move and they said, okay, I'm going to put my stop under here. And then they saw this move down here and they said, okay, that's a good spot. Let me put my stop down here because if it goes below there, then I don't want to be in the trade anymore. I'm just going to close my position. So that explains why there was money down here, because retail traders are taught to put their stop below a previous low or high. Why are they teaching you that? Because that's how they take your money. Come on, think about it. So we made the move down, and it took all this money. Past 2 days have taken all this money from people that were buying for the past 2 weeks. So that's done, did and done. Now that that's over with, our new story begins. Will they take any money that could be hiding up here? There might be a little bit up here. Or there could be some down here, there could be some here. You never really know. But the fact that it came down here and grabbed this simply told us that there wasn't enough people shorting the market. Because if there was, it would have gone up to take their money. There was more people buying than selling. So if more people are buying than selling, when is the tide going to turn? When is there going to be more people selling than buying? Well, you have to entice them. As a market manipulator and the markets in general, they have to entice people to put their money on the table. So anytime I see some big, ugly red candles like this, I start formulating a game plan to be a contrarian and go up. Why? Because this is telling me to sell, sell. But you don't want to do what it's telling you. You want to buy that in the belief that people are going to be emotional and sell off their positions at a discounted rate for you to buy so price can move up and you can sell it at a premium back to them. It's dog eat dog. That's all there is to it. But you never truly know what the market's going to do. We very well could, from this point here, our little bitty area we're sitting in right there, you know good and well there's money to be had down here. Good and well, because there's a quick move up here, quick move up here. People were getting emotional right here. They were like, oh, it's going up. Oh, it's going up. Let me buy. Let me buy. Let me buy. That's emotional scribble right there. And they were buying that. And there's money down here. So I would not be surprised one bit if the market just decided to rip it down, pause, rip it down again, just to take all that emotional buying that's down here. It done took this money. But it all depends on how much is on the table. Now, how can you tell a point of reversal? That is a whole nother story for a whole nother day. But there's a lot of telltale signs that there could be a reversal. Even where we're at right now, I'm going to zoom back in. I'm going to zoom back into our little area we're looking at here. We're going to hone in here and see, why am I so interested in this little area of consolidation that we're currently in? And I keep yapping about it. Well, it's quite simple. It's because we made that sharp move down. We had a small consolidation, another move down, itty bitty consolidation, another move down. But then now we're here. This is a pretty large, it's getting to drag on for 2 days now. And zooming in on it, it just it keeps behaving like it wants to go up. I mean, just look at it. It it moves up and then pulls back. Moves up a little bit and then pulls back. A little bit move up, pull back, pull back, pull back. Move up, move up, move up, and then pull back. And then jump up and then slight pull back. And then here we are, another little pull up. So why is it stopping here? What's going on? What is making it hesitate? It's like you would think you would think that price would be running down right now. You think it'd be running, but it's running and then it stopped. Why did it stop here? And then you formulate your own game plan of why you think it stopped there. Personally, I think it could be stopped here because it might see something juicy up here. It might see something juicy up here. And it might be looking over its shoulder as it's running by saying, whoa, hold on a minute. I might want to get that. And if it's good enough, if the money's good enough up here, of people that have been selling, it very well could rip up, take that money, and do a drive-by, and then continue down its move. Don't be surprised to see that either. And I know that sounds crazy. I keep saying, don't be surprised, don't be surprised, but that's how it is. You can only formulate what you can do and have good risk management by spending more time watching than you are trading, because the market will show its hand eventually. And when it does, you know it's going for something. If I see price come up here and do this number and take this little bit of money right here, if I see that within the next day or so, I already know that it's most likely high probability of coming up here too, to this area. Because if it was willing to jump out of its consolidation zone to grab this money here from this area, then it's more than willing to grab it from here. Because why is it going to change? Why is price going to change its direction for 50 bucks when it can have the whole $100, if that makes sense? That's just an analogy. But we've been watching it. We've been watching this pair. I did want to go over a couple stocks today, but it seems I've carried well over my 30 minutes. And I'll leave it with this last bit of interest here. We're going to look at the dollar versus the yen. Wow, look at that. That is a thing of beauty. $1 right now gets you 154 Japanese yen. 154.699. 645. Wow, it has just been climbing. This is a daily chart, which means each candle represents one day. So this is going from May 2022 to now. This is exactly 2 years of action right here. So the past 2 years, the dollar is just getting so much more valuable than the Japanese yen. And it just keeps going higher. It keeps making higher highs. It just made a 30-year high today, or 34-year high today. Everybody's talking about dollar yen. It's going to get up to 158, 156. All the top analysts out there. It very well could, but it also could get people just excited enough, because we're in price discovery now for the past 30 years. And it could get people just excited enough to really start wanting to go long on this asset. Because there's people that have been shorting this, shorting this, shorting this, shorting this, trying to catch the top. And they keep getting punished because it keeps going higher and higher and higher. But there's also people that have been buying this, buying this, buying this. And we have been punishing people that have been shorting this asset for the past year and a half. Punishing them. Just taking their money left and right. But we haven't really been taking the money of people that have been on the other side of the trade. This is just a warning. I've seen charts play out a lot over the past 4 years. If you are long dollar yen right now, take a little off the table. Be glad with what you got because you never know if we're going to jump up to 165, 157, or if we're just going to rip it down right now. Because believe me, looking at this daily chart, there is a big area of here. And that's a lot of open space. And there's a lot of people that have been buying this, thinking they're going to get a payday of $1 getting you 200, 250 yen. Once enough money's on the table, the market is going to take it. We just don't know when. It could be tomorrow. It could be a week from now. Could be a month from now. Could be 6 months from now. But at one point, things generally do not just climb like this forever. At one point, it has to take a breather because the market's not going to keep paying everybody that's buying this asset. Eventually, they're going to come back and take your money. So that's just kind of some thoughts I had on dollar yen. I love trading dollar yen, but more so on the lower time frames. But this was just an interesting story, an interesting aspect of what's been going on with it lately. And I appreciate everybody that watched the live and hit the like. And we're going to hit up our third live any day now. And we will holler at y'all later. Peace.